Hello and welcome back to Investing for Generations, your channel for high-quality stock research for long-term value investor. And today I want to give you my weekly update on my real money portfolio for week 28 of 2021. And if you're new to my channel, I started this North American portfolio at the 2nd of December 2019, and since then I have a performance in this portfolio of 64.85%, which is quite an outperformance to the S&P 500 over the same time span, which have a performance of 38.96%. And so every weekend I give you the insight to this real money portfolio. And today the topics will be the start of the Q2 earnings season, the transactions of last week, the received dividends, and then we take a look at the performance overall. So let's go. But before we start, please subscribe to the channel, ring the notification bell to never miss another video, and give me a big thumbs up. This helps me and my little channel so much. Thank you. So, the Q2 earnings season just started last week, and first of all, JP Morgan reported their Q2 numbers. And JP Morgan reported a big jump in second quarter earnings on Tuesday, as the largest US bank gained from a surge in deal making and released more reserves it had set aside last year for potential pandemic-related loan defaults. The bank's net income rose to $11.9 billion or $3.78 per share in the quarter ended June 30, from $4.7 billion or $1.38 per share a year earlier. Analysts on average had expected earnings of $3.21 per share. So good numbers from JP Morgan on their earnings. They beat the estimates quite a bit. However, the stock after this Q2 earnings was reported just fall a little bit to currently $151.91 after really a big run over the last few months. And so my 30 shares in my portfolio are now up 64.73% or with an absolute performance of $1,825.25. So far, so good. And then also the second bank in my portfolio, Wells Fargo, reported their Q2 earnings. Wells Fargo swung to a profit in the second quarter. The fourth largest US lender reported a profit of $6 billion or $1.38 per share, compared with a net loss of $3.85 billion or $1.01 per share a year earlier. Analysts on average had expected a profit of 95 cents per share. So also really positive news from Wells Fargo. They beat the estimates, they come back to profitability, and so this looks also good, and it seems like Wells Fargo is back on track, or at least on the way to that. Right now, Wells Fargo is traded at $44.28, and my 79 shares in my portfolio are up 42.17% with an absolute performance of $1,057.28. Also here, so far, so good. Then one of the insurances in my portfolio also reported their numbers, and this time it was Progressive. Progressive reported Thursday that its net income attributable to the company for the second quarter declined 56% to $790.1 million or $1.34 per share from $1.79 billion or $3.04 per share in the prior year quarter. On average, 15 analysts polled by Thomson Reuters expected the company to report earnings of $1.08 per share. Net premiums written for the quarter grew 13% to $11.48 billion from $10.14 billion last year. Analysts expected revenue of $11.52 billion for the quarter. Net premiums earned were $10.98 billion, up 14% from $9.65 billion in the previous year. And so the profits declined, the net premiums rose, and so my position in Progressive, my 53 shares, are now up 2.87%. Is a relatively young position in my portfolio. You see here on the green dots when I bought my position, or at different points I bought my position, to now 53 shares. And so I will stick with that. I'm quite confident in Progressive and also my second insurance, Allstate, so no need to worry. I just will stick with it. Then take a look at the transactions of last week, and there is nothing to say because there was no transactions at all last week. So we can jump to the dividends. And so I received my dividend from Progressive Insurance last week. This was a tiny dividend of $4.32. And also I received my dividend of $28.92 from Leggett and Platt. And with that, take a look at the performance overall. And first of all, take a look at the performance of every stock in my portfolio, and you see still Imperial Oil is the best performing stock in my portfolio, even if they really came back the last few weeks and now the performance is only 85%. We were up like 120% or so in the peak. Followed by Facebook, Leggett and Platt, and so on. And at the end, MI Homes, which still recover and hopefully will rise soon. And also the two Chinese stocks still in the minus. But after all, nothing to worry here. All of these three companies in the minus are great companies, great businesses. And so I will stick with it. And even better, I will use this quite cheap prices to add more over time. And then overall, as I said at the start of the video, my portfolio have a performance of 64.85% since the start of 2nd of December 2019, and this is of course a very good result for me. And if you like the whole idea of the long-term value investment strategy, then just subscribe to my channel, ring the notification bell to never miss another video, and then normally you get one stock analysis every week, and every weekend the full insight to my real money portfolio with all the transactions, all the dividends, all the earnings and news. And if you like all of that, then just stick with me, and then we will see the next time with another video. Thank you for now. See you soon. Take care. Bye bye.